You ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Well, let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Wednesday, 10th day of November, 2021. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds. That will give you one-click access to the show each and every day. It also gives you access to the question box so that you can ask questions and participate in the discussion. On the days that you're out of the office, away from your desktop, there are two additional ways to join the show live. First, you can point any internet-connected browser to cfrn.net/live. There you'll find a live, real-time simulcast of the show as it unfolds. You just want to have access to the question box. We also stream live each day on our YouTube channel, youtube.com/CFRN. Not only do we stream this show live each and every day, but we also archive it on our YouTube channel. Currently, we have over 1,800 daily live broadcasts archived there for your educational and viewing pleasure. So with that, we'll open with a word of prayer. Heavenly Father, we thank you today for your faithfulness. We thank you that you walk with us every day. Wherever we go, whatever we do, you are with us always. We proclaim that your promises are true and your goodness and love never fails. In this moment, we come to you and lay our lives before you. May we honor, worship, and adore you with every fiber of our being. Father, we proclaim that you are the Holy One, the Lord God Almighty, who was and is to come. Your beauty and majesty are beyond compare. On this day, we join with all those present and confess you as Lord from generations past and present, and with all the angels that sing in heaven of your greatness and your splendor. In Jesus' name we pray. Amen. Amen. All right. Happy Wednesday, guys. I hope it is a happy Wednesday for you, wherever you are, wherever you are. Let me give you the numbers from around the world. These are the cash markets, the indices, as they're called. After that, we'll pass it off to Michael, and he'll bring up his charts and give you a complete recap of everything that happened in the live training room. After that, I'll come back. I'll bring up my charts. We'll walk through each one of the individual markets, and we'll take a look at the Logic 247 alerts and the Concierge Trade alerts. Currently, starting here in the U.S., the Dow's down 40 points. The NASDAQ is down 82, make that 83. S&P 500 down 8. The Russell 2000 down 4. Again, those are the cash markets or the indices. Okay. And the commodity basket. Crude oil down $1.87. We had inventory numbers today. Trading 82.27 last. That's a drop of 2.25%. Gold, on the other hand, after those, we had the worst CPI number this morning since 1990. Gold shot up $26.60, trading 1857.40 last. That's a gain of 1.5%. Silver up 69 cents, trading 25.01 last. That's a gain of almost 3%. Now let me remind you that when you're holding an ounce of silver, if the price changes by $1, you make or lose $1. If you're holding one silver futures contract and the price moves $1, you profit or lose $5 grand. And so with that $1 figure in mind, let me say again, silver is up 70 cents on the day. Another 30 cents and you'll have a $5,000 trade on your hand if you're long the market. In the Asian markets at the close, Nikkei down 178 points. Shanghai fell 14. The Hang Seng gained 183. And in the European markets at the close, FTSE posted a gain of 66 points, which is almost 1%. The DAX rose 27. The CAC gained 2 points. That gives us a mixed day in Asia, a green day in the UK, and so far it's a big red Radio Wednesday here in the US of A. And so with that, I'll pass the torch over to Michael. He'll give you a recap of everything that happened this morning in the live training room. After that, I'll be back and I'll go over the logic alerts, the concierge trade alerts, and at any point during the broadcast, if you have questions, simply type them into the question box and we'll be more than happy to answer those questions for you. So Michael, if you are ready, you can take it away. Now, if you've never heard that sound before, that's the sound of Michael not quite being ready. So, as we await his arrival, we'll go ahead and look at the daily chart of the S&P 500 E-mini futures. I've already done it, but a reminder, if you run your charts around the clock, your daily chart needs to be refreshed, just like I'm doing, when you sit down to trade. Yesterday, we drew in this window of opportunity. We talked about the step line. We said that price needed to get below the step line, and that would open this window of opportunity for roughly 46.49 down to the 24% Feb retracement at 46.05. Price has been hanging out at that daily step line most of the day. In fact, we have a doji on the day. Now, back here on Friday, this was the all-time historic intraday high. And that all-time historic intraday high is 47.1175. Monday of this week, we put in the new all-time historic closing high of the S&P 500 E-mini futures. And that closing price was 46.92. Tuesday, yesterday, we had a down day, okay, which brought us below blue and climbing to support at the step line. We now have a red body. Well, actually, we had a red candle all the way down to the bottom of this wick. But at the open this morning, buyers came in, and even after the worst CPI number since 1990, they drove price back up to the step line where they found resistance. Remember, coming down, it's support, but going up, it's resistance. So what we're eagerly awaiting right now is a break of the low of this session, today's session, so that we have an opportunity to trade this beautiful window of opportunity from 46.45 down to about 46.05. There's about 40 points in there. At $50 a point, that's $2,000 per contract traded. And I believe I hear Michael.
Yes, that is me.
Okay,
that is me.
We're ready for you. Take it away.
Okay. All right, here we go. Here we go.
To my new friend Ruby, if you happen to be listening in, hi Ruby. Okay.
All right, gonna bring that over here. Here we go.
Okay, brother. I'm gonna hit mute on my end. It's all yours.
Great. Okay. Good afternoon, everyone. Today is Wednesday, the 10th day of November, 2021. Is it really the Wednesday, right? Yeah, Wednesday, November 10th. Okay, I got that right. All right, so if you've not taken a free trial with us, go here to the homepage here at eminitrainingschool.com. On this page, all that we ask for is your first name, your email, and your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one trading just for you. Hit the send button, you'll be sent a confirmation link. You must click on the confirmation link, okay? If you don't click on the confirmation link, we don't know that you took the free trial, so you got to make sure you click on that. All right, here we go. Now, if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today, as I said, is the 10th day of November, 2021. We made 15 ticks in crude and 20 ticks in gold. Put us at plus 350 on the morning session. Today, it took 2 minutes and 2 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 15 trades this morning. So on the month now, we're at $2,712 a contract. That's over 8 trading days, averaging $339 per contract per 2-hour trading day. Now on the year, we've gotten our goal on 214 out of 217 days, okay? And that puts us at $124,920 on the year. Now, we are 1/3 of the way through the month, it looks like. So I want this to be over 130 by the end of the month. So, you know, just a few good days can do that. But I want it to be over 130 by the end of the month because 140 is what I'm looking for by the end of December. Anyway, on the year, it's at 124,920 over 217 days, averaging $575 per contract per 2-hour day. Now, this is the important part. If you were doing the 24/20 blueprint and you quit every time you got your goal for the day, and added 1 contract per month, right now you'd be trading 11 contracts and you would have worked a total of 58.25 hours this year, on the whole year. And you would have been up 2,400, well, you would have made an average of $2,460 per hour on the year. Okay. Oops. I keep doing that. Let's get into the actual trades here. Okay. Let's see, where do we have the least trades? The ES, we didn't have any. And this kind of goes along with what Dwayne was saying. Now, we were going through some stuff this morning in the room, and I drew the same spot that he had drawn. My spot's right here. And you see on a 5-minute chart, that's what this is. Well, actually, this is a daily, but it's normally my 5-minute chart. But the bottom of the box is right there at the BBC on a daily down at 45, roughly 45.80. And it's acting right now on a 4-tick range, you know, not giving us any trade setups, like it's going to make a big move one way or another. All right, it's all about this weekly trading zone that it's jammed up at right here. And it's acting like it's going to make a big move one way or another. So on the 4-tick range, we'll just trade what's in front of us. And this morning, there was really nothing in front of us. There was one short right here, right at the open that I missed, would have been a break even. There was another one right, well, it wasn't even one because we were going into the zone, so we didn't actually have a trade. I just drew a trend line. I was looking for more opportunities. There was one here, would have been another break even if I would have gotten it. And then there was really nothing. There was really nothing all morning. During the break, nothing. It was just an awful day on the ES. But the good news is, you know, you don't have any trades. This morning, hey, is that a shot, Bart? I was online at 9 o'clock this morning. 9:05, I think. Anyway, on the gold. Now, gold is where we got our goal for the day. It was really quick with the way it started off this morning. I took 2 trades right in succession, and they were really fast, and I just got the goal for the day on those. This first one I got into right here, and I picked up 8 ticks, and I had the target right at 10, and it bounced off the target like 3 times, and then it pulled back, and I said, well, it's going to go the rest of the way. And so I jumped in again when it gave me another trade setup, and I picked up the other 2 ticks. And then it did a little bit of a deeper pullback. Okay, the other 2 ticks, if you look at it closely, they're on a momentum long trade. I'll blow this up a little so you can see it a little bit better. Oops, I'm going to do this. Whoa, I didn't want to do that. Okay, that's better. But you can see it was on a momentum long trade right here. And I was just going for 2 ticks, and it gave about 4. All right, so I got 8 on the first one and 2 on the second one. And then it gave a deeper pullback, and then it kind of messed up the slingshot. Oh, well, it was open at 9:05 this morning, Bart. After that, we're looking for more trades on the upside, because if you look at the 30-minute, we had all these big bars right here, and I was looking for woo spots, and my woo spot ended up being on the way down. Once it got up here and it gave up on the upside, I was looking for it to get down to this level right here. It still hasn't gotten all the way down there, but that's where I was looking for opportunities where it would move fast. Windows of opportunity where it would move quickly. And it started moving down right in here, and the slingshot was agreeing with it, and it gave a short trade there, and it actually gave a short trade there, there, and there, and I missed them all. And it turned around, started to go long. It gave a long trade right in there that I missed. This was all in the first few minutes this morning. I don't know what I was doing then that I missed all those, but then it started going down again, and I was seeing all these levels here, but it wasn't pulling back deep enough to give us a trade. Okay. Then it turned around and started to go the other way, and I was waiting for a trend to develop in here before we can go long. Then it went up, it came right back, started going the other way again. I was waiting for a trend again, and then finally over here we got into one, a decent one. So we went from 10 to 30. We picked up 20 ticks on this. I missed that one, then I stopped out here, so we're back down to 22. And then I was waiting for a trend in here. It gave a huge move down, but didn't give a trend. Then it came back, and it was looking to go up to here. This was my pullback number. It pulled all the way back, and of course, I was saying if it pulls all the way back there, it's going to change the look of everything, and it did. It messed everything up. So it didn't end up with any follow-up trades, and we had to get out of that junk. And we got all the way over here, and I took a trade right here that would have been great if I'd have stayed in it, but I ended up with a break even. And then the thing just tanked, and it hit that level, and then it hit all the other levels that I was given. We finally got into a little bit of it down here. We picked up 3 ticks to get us to plus 28. Then we had a break even there, a break even there. Hey, I didn't count that one. I believe we got 5 ticks on that, and we stopped out right there. So I really ended up with plus 25. I stopped out on that last one. Oh, hang on. I was at plus 28, and then I got 5 ticks on that one right there. That put me at plus 33, and then I stopped out, and that put me back down to 25. Okay, so then came the break. All right, now there was a trade right here, but we really didn't have a trend. That's why I didn't take this right here. Once we started to establish a trend, there was a momentum trade right in here, but given the time, I wasn't really looking at that. I wasn't really looking at the time either. I was running a little later this morning. But there was a trade there that went up, and it hit that level. Then at the end of the session, I said, look to get up to here, and it didn't quite make it up there. It was doing all this as I was still talking this morning. I said this was the pullback number. This was the go-to number. It got within a couple of ticks of that. Then I pulled right back through that, and I didn't give anything on the downside. But it did give a shorting opportunity right there, and one more right over here during the break. Okay, so we ended up with actually plus 25 this morning on gold. And in crude oil, let's scroll all the way back here. Yeah. all the way back here. Okay, here it is on crude. Now I'd given this number for the first trade that we took in here, and we picked up 9 ticks to get exactly to that number. We picked up 9 ticks, gave a little bit of a pullback, a little bit of a push, but by that time the cycle was all messed up and there was nothing you could do. There was a shorting opportunity right in here that I missed. Then I grabbed onto the second one right, ouch. The second one right here, and I picked up 8 ticks on the second one. And then I grabbed the next one, picked up 6 ticks on that. So I went from here, I was at +9, then +17, and +23. Then I stopped out, put me back down to +15. Then it looks like got into a bunch of chop through here. There was a bounce off the BBC right here, but I didn't like it because we had lower highs and higher lows. And the crude inventories actually came out in here too. I wasn't actually sitting at my desk when that happened. There was a shorting opportunity in here that went right down to the number I was looking for. I didn't get that one. And then we have this beautiful leg here. Now this went with our woo, our window of opportunity. And I was looking for the window of opportunity to break down to here, and then after that to break down to right here. So it's done everything with the windows of opportunity that I thought it would. This last half of it was during the break. This half was during the room. But that was what was going on right here. Okay, then we got a break-even trade right there. And it tried to go long. I was looking for it to pull all the way back up to here. I don't know if it ever did. What number was that? 83.19. It doesn't look like it did. Nope, it kept going down. I was looking for it to pull back all the way up to here, but it didn't. And it gave this huge run up without giving us anything really. It gave one trade here that if you took it, it wouldn't have worked out at all. It would have stopped you out. And then it turned right back down. We need to break dynamic support here. It gave momentum short right there that I missed. It gave another short right here that I picked up 3 ticks on. That put me at +23, I think. Then I stopped out here, put me at +15. I was looking for it to get up to here, which it did, and then here, which it did. And then at the end of the session, I was looking for all of these levels on the downside, and you can see it did all that stuff pretty much to the tick, and then it went through it, and it kept giving stuff on the downside. Let's just see if we had any trade setups. I think you could have taken a trade setup right here. If you were doing the YBR trades, there were a couple of YBR trades in here you could have done on the short side. But see, the cycle had to reset in here after that big move down. Then let's see. Yeah, there was a short right in there and another short right in here. A momentum short right there. And that was about it on the crude oil. But crude was, it was kind of generous today. It was given a lot of opportunity. And so we ended with +15 on crude. That last stop out was our last trade on crude. And as it turned out, I ended both markets with a stop out. It looks like. But that said, this is actually a 25. Actually, that's not. This is actually a 20, and this is actually a 25. Right? Did I have that backwards? I think I had it backwards to begin with. On crude, we had 15 that went to a 20. Hang on. Crude, we had 15 that went to a 20. And on gold, we had 25. Okay. That's how it ended up. That's right, right? Oh, no. Let me just make that right. Yeah, okay. Gold was a 15. I mean, crude was a 15. That didn't go to 25. Gold went to the 25. That's right. All right. Sorry, I had to work that out in my head. I knew it was $50 difference, not 100. All right. So anyway, if you're going to read the spreadsheet, you read all the CFTC risk disclosures down at the bottom. Today's the 10th day of November, 2021. We made 15 ticks in crude, 25 ticks in gold, and we didn't trade the ES. Put us at +400 on the morning session. Okay, today it took 2 minutes and 2 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 15 trades. So on the month now, we're at $2,762. That's over 8 trading days, averaging $345 per contract per 2-hour trading day. We've now gotten our goal for the day on 214 out of 217 days. That puts us at $124,970. That's over 217 trading days, averaging $575 per contract per 2-hour trading day. If you were to quit trading when you got your goal for the day, and you were to add 1 contract per month, so far this year, you would have only worked 58 hours, and you would have averaged $2,460 per hour over the year. Okay? That is how that works out. These numbers over here are a little messed up right now. I still got to fix that formula. But, all right. So, if you've not taken a free trial with us, go to eminitrainingschool.com. On this page, all we ask for is your first name, your email, and your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hang on. Just for you. Hit the send button and you'll be sent a confirmation link. You must click on the confirmation link, okay? If you don't click that link, we don't know that you took the free trial, so you gotta make sure you click on that link. All right. All right. That's it. With that, we can pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yes, sir. I am ready.
Okay. And I see your charts.
Okie doke. Recap of the recap.
Today, it took 2 minutes and 2 trades to get to $100 per contract.
Good job, as always.
Thank you.
Now, Michael explained to you how to take the free trial, eminitrainingschool.com. If you've already taken the free trial and you're ready to become a lifetime passport holder with access to everything we do, everything we've ever done, and the stuff we're going to do in the future, you can get your passport today at eminifuturestrading.com. If you need help getting signed up, you can call Valerie at 949-42-EMINI or send an email to support@cfrn.net. During your trial, we treat you just like a lifetime passport holder for 1 entire week, with only one exception. Thursday nights, we have a members-only workshop, and so that's the only thing you don't get when you take the free trial. You have access to our platform, our indicators. We teach you our methodology, our strategy. You have access to the Logic 247 alerts. You have access to the concierge trade alerts. But the most important thing is you'll have what you've probably never had before, and that is a living, breathing instructor in an interactive environment, putting on and taking off trades in live markets, explaining every move he makes, every trade he takes, and answering every one of your questions all along the way. Okay? You get 5 consecutive business days on the trial. You're only allowed 2 trials per lifetime, 1 every 6 months, but 2 lifetime. We do track by IP address. Unfortunately, we're forced to do that. So once you take the trial, then you have to make a well-informed decision. If what you've seen and experienced over the past week is right for you, then you get your passport at eminifuturestrading.com. It's everything a trader needs, one low price, and you never pay us again. How much trading stuff have you bought over the course of your life? Wouldn't it be nice to know that you'd never have to buy another trading thing? So, whether you start the journey at eminitrainingschool.com or you're ready to become a part of a lifetime member of the family, go to eminifuturestrading.com. Now, before we get into the logic alerts, the concierge trade alerts, and the charts, I'm going to share something with you guys that some of you will find of interest because you have a vested interest. And I'll just put it on the screen. TMRC Texas Mineral Resources signs a mineral exploration and option agreement with Santa Fe Gold to jointly explore and develop a target silver property within the Blackhawk Mining District in New Mexico. What does that mean? TMRC, an exploration company currently targeting the heavy rare earths, technology metals, and a variety of industrial metals, primarily through its joint venture Round Top Mountain in Texas with USA Rare Earth, is pleased to announce now this just came out today, is pleased to announce the execution of a definitive agreement to negotiate and subsequently enter into a joint venture agreement with Santa Fe Gold Corp. Santa Fe is currently not trading. There was an issue with filings with the SEC. Those have been being worked on now for quite some time. We look to see that Q and that B dropped and going back to trading as simply SFEG. Purpose of this agreement is to jointly explore and develop a target silver property which has been selected by TMRC among patented and unpatented mining claims held by Santa Fe Gold within the Blackhawk Mining District in Grant County, New Mexico. Completion of a joint venture agreement is subject to the successful outcome of a multi-phase exploration plan leading to a bankable feasibility study to be undertaken shortly by TMRC. Under the terms of the joint venture agreement, TMRC would be the project operator and initially own 50.5% of the joint venture, while SFEG would initially own 49.5%. Funding for the bankable feasibility study has been provided by Green Tech Minerals Holdings, a privately held green energy supply chain project finance company based in the DC area. The Blackhawk Mining District is located approximately 13 miles west of Silver City, New Mexico. As documented in USGS, New Mexico State reports, and Society of Mining Engineers reports, mineralization in this district, in general geological terms, consists of numerous narrow carbonate veins containing high silver values in randomly distributed small lenses or chutes. It is one of a well-known geologic type of mineral deposit generally referred to as the 5-element veins. Worldwide, approximately 20 of this type deposit has been identified, including the historically important silver mining camps of Cobalt, Ontario, Walkamstal, the Czech Republic, Annaberg, Saxony, and the Port Radium District in Canada. The signature characteristics of this type of deposit are high silver grades and its occurrence as native metallic silver. Now the story continues. I won't go through the entire thing. The two principal historic mines in the Blackhawk District, the Blackhawk and the Alhambra, which are owned by Santa Fe, operated in the early 1890s and both closed after the silver price collapse of 1893. Engineering grade information from these mines is non-existent. However, we believe that available information suggests that this mineralization may respond well to state-of-the-art electrogeophysical exploration methods. If this cost-effective method can be used to identify and precisely locate these ore chutes and avoid the prohibitively expensive traditional method of statistical drilling of the vein with angled holes from the surface, potential for economically viable mining operations may exist. The exploration program will also assess recovery potential for critical mineral co-products, including cobalt, nickel, and uranium, which are known to occur in the Blackhawk District. Under terms of the Mineral Exploration and Option Agreement, TMRC plans to conduct a district-wide evaluation among the patented and unpatented claims held by Santa Fe Gold, SFEG, consisting of geologic mapping, sampling, trenching, radiometric surveying, geophysics, drillings, and other methods as warranted. Based on the district-wide evaluation, TMRC will designate one 80-acre tract as the project area and commence detailed exploration work. The property covered in the agreement is approximately 1,300 acres and covers approximately 75% of the known mining district. The area to be studied also includes a 2-mile radius area of interest. The agreement also provides TMRC the option to participate within the areas of interest should SFEG elect to seek outside participation in their exploration and development. Since November 2020, TMRC has conducted 2 phases of preliminary geophysical investigation, one in March of this year, another in June. The first, conducted by Zonage International, was a closed space IP resistivity survey. The second, also conducted by Zonage, was a closed space variation of time domain EM called NanoTem. It was designed by Zonage to locate buried metal objects such as pipelines, tanks, and unexploded ordnance. The IP resistivity survey, while outlining several features of interest, was deemed too large scale to detect the sought-after drill targets thought to exist in the Alhambra and Gable veins. The second method has produced favorable results. Analysis of the data shows that we are acquiring valid data to a depth of approximately 120 feet. This press release goes on and on. Needless to say, this is an incredibly huge deal. This exploration they're about to do, funded by Green Tech, is going to cost approximately $6.5 million. So there's a firm out there that has enough faith in this project to pony up $6.5 million to do all of the work that needs to be done. That's tranche 1, then there's tranche 2, tranche 3, tranche 4. Those of you that are Santa Fe Gold holders, I highly suggest that you read this press release in its entirety and keep your eye on the news over the next couple of weeks under the symbol SFEG. As a full disclaimer, I have been a shareholder of Santa Fe Gold since 1996, way back when it was ASCO Mining. I've been through a lot with this stock. It made me a millionaire, and then when I failed to sell my stock, it promptly went to zero for reasons I won't even bother to go into at the moment. As I've said on the show before and again, the next time SFEG goes to $2, I will take shares off the table. When it ran to $2 before and made me a millionaire, I was convinced it was headed to $5, but then some things happened, and while most of my followers took their profits at the $2 mark, I was, forever optimistic. I was certain it would go on to $5. It did not. Lots happened since then. I still hold all my shares, and I've said it before and I'll say it again. The next time Santa Fe hits $2, Dwayne will be taking a minimum of half of his shares, which is a very substantial holding, off the table. Okay? So, with that, we can get on to today's business as it relates to what we do best, and that's trading futures. Okay. Logic 247 is our 24/7 around-the-clock E-mini alert service. While Wall Street opens at 9 a.m. Monday morning, or 9:30 a.m. Monday morning, the global markets, the futures markets, open Sunday night at 6 p.m. Eastern. And so our alert channel, where the individual alerts are listed, that opens for business at 6 p.m. Eastern Sunday night, remains open around the clock till Friday afternoon at 5 p.m. Eastern, when the global markets close. Since the markets open Sunday night, we've issued a total of 40 alerts, 12 never triggered. We're still awaiting the outcome of 5. We've had 23 actionable alerts, of which 4 or 17% would have been stopped out based on not risking more than $300 per contract per trade, less when possible, using a very simple 3-step process based on market structure that we teach all of our traders. Over the last 171 weeks and over 8,700 individual alerts, we've averaged 20% of the alerts being stopped out on any given week over the past 171 weeks. And so this week we're a little ahead of schedule with just 17% stopped out, but the week is still early. So that's Logic 247, the around-the-clock Emini alert service, which includes crude, gold, and silver. We also have our original alert service, the concierge trade alerts. Now the format for those is slightly different. Instead of coming out around the clock 24/7 via the private Telegram channel and the trial Telegram channel, we've got a lot of channels on Telegram, some public, some private. Check with Valerie to see what you have access to. The concierge trade alerts are posted each evening shortly after the Globex markets open. Last night I got them out at 6:20 p.m. Eastern. When this static report is published, you should note where the current price is when this posts. And then when we go to the charts, you'll see that I've drawn a line in the sand at 46.82, drawn a line in the sand at 46.57. These are both important prices, important areas. Once this report is published, if price starts trending up towards 46.82, that is bullish. And so our strategy will look for opportunities to be long the market. You will also use everything you learn from Michael and Valerie in the live training room to find opportunities to be long the market. If price starts trending down towards 46.57, that's bearish. So our strategy will look for opportunities to be short the market. And of course, everything you learn in the live training room, that's when you'll put it to work, looking for opportunities to be short the market. Now, as price starts trending up to 46.82, you don't have to wait to 46.82 to trigger long, nor do you have to wait to 46.57 to be short. Those are your lines in the sand. If it's obvious that price is trending up towards this important price, important area, then you'll find opportunities along the way on your smaller time frame to get long. The same is true of the short side. Now the CTAs, we've published those since, I'm thinking 2009, maybe we'll call it 2010. The weekly trading zones we've published since December 14th of 2009. So I'm thinking it was about a year, maybe 2 after that, that we started to publish the CTAs. Price behaves around a CTA number very much like it behaves around a weekly trading zone number. They're important prices, important areas. We cover the, if you want a screenshot, you can grab it. We cover the S&P, the Dow, the Russell, crude, the NQ, gold, and silver. Okay. All right. With that said, we'll go to the chart. We've already talked about the daily chart. Okay, if you weren't tuned in yesterday, you should go back and watch yesterday's show. We talked about the importance of the step line being support. We opened last night, okay, right below the step line. Looks like we ran up maybe a couple points above the step line, and you see where we're currently trading. Okay, I want to see us get below the low of that candle and the high of that candle, hence the window of opportunity. Now, the last leg up on the S&P daily chart which is what institutional traders and fund managers watch. Okay, we watch 30-minute charts, 5-minute charts, range charts, tick charts. They watch daily, weekly, monthly decisions to make their buying and selling decisions. And so when price pulls back to a fib on the daily chart, we expect a tremendous reaction, and we almost always get it. Okay, now I say last leg up. The low was put in October 1st. The high was put in November 5th. We've now traded below the first potential area of support, blue and climbing. We've now traded below the second area of potential support, the black line, okay, right here, or the step line as it's called. I want to see us get below this area right here, and then that opens the door for price to drop to the 24% fib. Now, when price hits a fib on a daily chart, it's not just a bunch of day traders seeing it. The big money, the smart money, whatever that is, they take action. Okay, so price hits the 24% fib, we expect a nice bounce. That bounce will do one of two things. It will either attempt to take out the all-time historic high. If it fails to do that, it will return to the 24% fib. And if the return trip doesn't hold, then our next area for support is the daily BBC. That stands for bull bear cross. When price is above it, we're bullish, we anticipate higher prices. When price is below it, we're bearish, we anticipate lower prices. And then when price gets back above it, we're bullish. There's a bullish cross. And look at how many consecutive green days we've had. No one would argue that the market is due for a substantial retracement. The shallowest possible fib retracement of the last leg up on the S&P daily is 4605/06. Okay, so watch this closely. We're talking about an entry, somewhere in the area of, let's see, 46. We have a weekly trading zone at 46.47. You'll see that when we go to the 30-minute chart. So you'll want to let price get below that weekly trading zone, and then I pray you take advantage of this beautiful opportunity that the market seems to want to give us. This is why we start out each day on this show with the daily chart, and why I suggest you, whatever you trade, whatever market you trade, look at your daily chart. Everything I say about the S&P 500 daily chart is true across all markets and all time frames. Everything we teach is fluid across all markets, all time frames. Now there's going to be people that will tell you you can't trade the S&P the same way you trade crude because they have different personalities. They probably do. I'm not looking for a date. I'm looking for a high probability, low risk trade opportunity. Now, if you hear nothing else I say today, hear this. Price flows the same on every market, on every time frame. From support to resistance, back to support, back to resistance, back to support, over and over, again and again. It's a never-ending cycle. It's been in place since the inception of the markets, and until this world as we know it ceases to exist, that's how it's going to continue to operate. It's the underlying principle of how markets work. It's the truth about trading. Okay. So obviously resistance overhead would be today's high, support, today's low, and I've already explained the window of opportunity that could potentially take us to the 24% fib. Now, price gets down to this fib, anticipate a bounce. Again, one of two things happens with the bounce. It challenges the all-time historic high, or tries to. If it fails to take out the high and returns to the 24% fib, If it doesn't hold the second time, then we expect the BBC to hold, because the pullback to the BBC holds more often than it doesn't. Also, price always reverts to the mean. It just so happens in our case that the mean is green, and as I said, we call it BBC, just stands for bull, bear, cross. Bullish above it, bearish below it, bullish above it. That translates across all markets, all time frames. All right, here's the S&P. The short CTA last night was 46.57. Right? The long CTA was 46.82. Now the vertical line on my chart, right here, that separates today, Wednesday, from yesterday, Tuesday. We do have a price channel on the 30-minute chart. From the high, from the top of the channel to the bottom of the channel, to the top of the channel, to the middle of the channel. When price gets to the middle of a channel, it's a 50-50 shot whether it's going to return to the top or continue to the bottom. Well, from the top, back to the bottom. We did spike that channel just a little bit. Caught a bounce, came back, spiked it again, but the lower trend line held, sent us up, and this was the opening candle this morning on Wall Street. The largest candle is typically the opening candle. See yesterday's big huge red down candle. Today we have a big green 30-minute candle. Okay. Now, price came right down to the CTA and got rejected. That's not unusual. Price behaves around, in fact, some people refer to the CTA as a daily trading zone. The weekly trading zones, those are the ones we've published since December 14th of 2009. When price rises to a weekly zone, we expect resistance. When price drops to a weekly zone, we expect support. The most likely thing to happen at a weekly trading zone is consolidation. The second most likely thing is rejection. That's this right here. See how price came down, touched the zone, but when the 30-minute candle closed, all that was left touching the zone was this wick. So price got rejected. You're going to see consolidation 70 to 75% of the time. You'll see rejection 20 to 25% of the time. And then 5 to 10% of the time, what you'll see is called a slice. That's when price slices through a zone like it's not even there. When that happens and the move runs out of steam, no surprise, it found support at the weekly trading zone. Price then retraces back to the zone that it sliced through and then continues in the direction of the slice. Now this candle, the swing high was 84.75. It didn't quite make it all the way back to the zone, but the principle, you can see it in play. Slice. The slice runs out of steam. It attempts to retrace back to the zone it sliced through. There was such bearish momentum at the moment, it wasn't able to do that. The other indicator that you see on my screen is called the CFMA1. I refer to it as blue and climbing and red and falling. When it's blue and climbing and above the BBC, you want to be long. When it's red and falling and below the BBC, that's where you look for your short opportunities. That puts the prevailing trend as defined by the 30-minute chart and the BBC, it puts that wind at your back. Okay? So, came down, we bounced off this trend line once, and then we hugged it for a while, and then we bounced again, and then we bounced again. And now price is just below the weekly zone, 46.67/68. These zones are published Monday morning, 6:15 a.m. Eastern. Okay, our traders get the zones on the chart as soon as they come out, but you don't throw out last week's zones until it's obvious that the new weekly zones have taken over and now hold sway over the market. So what's the next high probability move from here? Well, we're below the weekly zone, we're below the BBC, and so then it's obvious, I hope it's obvious, that the next potential move is to the downside, where we potentially expect support either at the trend line or right at the CTA number. It's not unusual to see price get rejected to the tick right at a CTA. Same with the weekly trading zone. Okay? All right. So we've not officially triggered the CTA on the long side or the short side. Now, I won't do this across all the charts, but to make sure you understand, this CTA is good for today's session. It's good for the entire session. Once an alert triggers, whether it's a logic alert or a concierge trade alert, the probability of it triggering multiple times is greater than the probability of it not triggering multiple times. Okay? So we'll move on to the Dow. On the long side, the CTA was 2 1/4. Swing high was 55. So that's 30 points at $5 a point to $150 per contract traded. And we only got the one trigger on the long side. CTA on the short side was 36,125. Okay, on the initial drop, took us down to a low of 72. That's roughly 50 points at $5 a point, $250 per contract traded. Here we see price getting rejected. We had a small move here that took us from 125 down to 103. That's still $100 per contract traded. And then we triggered again. This time we dropped 25 points at $5 a point. It's $125 per contract traded. Now that you see here, price has already dropped and given that $125 per contract trade again, and now it looks like it wants to give it again. Okay, that's the Dow. You'll notice as we opened last night, price spiked the zone, pulled back to the BBC. We had this spike here off the open this morning against the backdrop of some very bad news. Now let me draw your attention. You see this bearish cross here? Why did the market stop there? When a bearish cross leads to an extended move, the first time price returns to that area, you should expect it to be good resistance. Same is true of a bullish cross. Back here on this daily chart, our last bearish cross was here. Leg to the downside, price pulled back to the BBC, price always reverts to the mean. It consolidated for 3 days, and then it reached up and touched the area of the cross and gave us the next leg to the downside. Now, everything I say about the daily chart is true across all markets and all time frames. We talked about the BBC, we talked about the 38% fib, the 50%, the 62, and then we've got this bullish cross. So just as when price returned to the area of the bearish cross, we expected a leg to the downside. Price finds its way all the way back to this bullish cross. We expect that to be support, and we expect a very healthy bounce, just like we got a very healthy bounce here to the downside. Okay? All right. So, bearish cross, expect resistance. high of today's session, yesterday's bearish cross. That repeats itself over and over again and again. Okay? If you were long the open this morning, you're riding high, woohoo, we're going to the moon. You have to understand what obstacles lie in your path. Now, if price had been able to get through this area, then the next area for resistance would be up here. At the previous swing high. If price can get through that area, then we have a window of opportunity, or woo, as they're starting to call it in the live training room. We have a woo up here. Okay. Now, if price can break through this area, there's a window of opportunity from about 270 up to about 300. If we clear this previous resistance, then 325 up to 365, to about 40 points window of opportunity. I don't anticipate that happening because of what we see happening on the chart in front of us. Okay, that's what could or would happen if price was rallying. But we've triggered the short CTA again. Where would we expect support? Well, initially at the previous swing low. If we take out that low, then the next area for support is right here. If price can take out this double bottom, then the next place for support is the weekly trading zone. From the moment the markets open Sunday night until they close Friday afternoon, price is trying to get to a weekly zone. If price is above the BBC, it's trying to get to the zone overhead. If it's below the BBC, it's trying to get to the zone below. We're below the BBC. We got red and falling. Blue and climbing, obviously bullish. Red and falling, bearish. And from the trigger at 6125, so far we've put in a low at 105 so far. 20 points, $5 a point, $100 per contract traded. And you might say, well, you know, that's great. I'm glad you guys know how to make $100 a day, but that's not enough money for me. Understandable. Especially with the highest CPI number since 1990. Unbelievable. In fact, we should talk about that in a minute. Okay. When you start with us, when you become a passport holder, you will start trading in your simulator as you attend the live training room each morning. You do not start trading real money right away. I don't care how much experience you have, because you have zero experience with our methodology and our strategy. If you're looking for the type of results that we get, you need to learn our methodology and strategy. That's why you became a passport holder. So, in the beginning, as you attend class each morning with a live instructor, putting on, taking off trades, and answering your questions live in real time, you'll be trading in the simulator. We want you to remain in the simulator until you put together 10 consecutive days in a row where you reach your goal in 10 trades or less. Our 24/20 blueprint, when you've put together those 10 consecutive days in a row in sim, the blueprint will give you the green light to go live with one contract. Now that you're trading real money, your goal is to increase your account balance by $2,000. Once you accomplish that, the blueprint will give you the green light to add a second contract. You've earned the money to support adding a second contract. So now a 20-point move or a 2-point move in the S&P is the same thing. Make sure everybody understands that. 2 points in the S&P pays the same as 20 points in the Dow. Okay? So, if you take 2 points out of the S&P with one contract, that's $100. But when you earn the right to add a second contract, those same 2 points are worth $200. The blueprint will notify you when it's time to add contract number 3, number 4, number 5, number 10. You only add one at a time, and you only add with profit you earned in the market. By the time you've earned the right to trade 10 contracts, 2 S&P points is worth $1,000. I'll say that again. By the time you earn the right to trade 10 contracts, and you only add one at a time when the blueprint tells you it's time, and you only add with profit you earn in the market. 1, 2, 3, 4, one at a time. But by the time you've earned the right to trade 10 contracts, those same 2 points that used to make you $100 now make you $1,000. And with roughly 250 trading days in the year, that's potentially $250,000 a year. But be careful, be cautious. So many traders, because maybe you've just retired or you've inherited some money, so you open an account and you want to make $1,000 a day, so you just start trading 10 contracts. There's no faster way I know of to lose all of your money except going to Vegas. It's the only other way I know to lose that much money that fast. Or to just drop the sack of money running out of the bank in your foiled attempt to rob the bank. Okay? This is a business. You've got to treat it like a business. The more you treat it like a business, the more it will behave like a business. In every business, there's profit and loss. If you were to go open a Subway franchise, okay, you have a cost of doing business. You got to buy the meats, you got to buy the cheeses, you got to buy the breads, or they break their bread in store. Those are their expenses required to operate their business. Your expense to operate your business, other than your electricity and internet, are the trades that get stopped out. Getting stopped out is as much a part of trading as breathing is a part of life. So far, this trade has now dropped from 125 down to, come on, tell me, 36,066. So it's about 60 points, $500 a point, $300 per contract traded. Now, where do we expect this market's going to find support? There you go. Now, a break below this area opens a window of opportunity down to the weekly trading zone. But if you just took your money and walked right here, nothing wrong with that. Okay? All right. Question in the chat box: if one wanted to be ultra conservative, could one go for $10 in the micros, or is there not enough liquidity in the micros? There's liquidity, Michael. The only issue with trading the micros is if you're just taking a couple points out of the market after commissions, there's not a lot. But a good way to go from the simulator to trading the full-size Emini is to spend a little time trading the micros. There's nothing wrong with it. You're not going to get rich trading the micros. But it gives you experience being live in the market. So that's a great question. And yes, I think that is a good step. Once you've accumulated some time in the simulator, okay, put your 10 consecutive days in a row. If instead of going straight to the full-size E-mini, you want to spend some time trading live in the micros, nothing at all wrong with that. Okay, it's the same market. It's the same market. Okay, it's just sliced up a little bit differently. Sometimes people think, and I'm not saying that you think this, but some people think it's a completely different market. It's not. In fact, if I change this chart to M Y M. Now, everybody get a mental picture of what the chart looks like, because I'm going to go from the regular YM to the micro. Identical. Absolutely 100% identical, because it's the same market. They just slice and dice it differently, so you don't have to risk as much. Okay, so I hope that was a good answer for you. If you need further clarification, please call Bert, 866-928-3310, 866-928-3310. He'll be happy to go over it with you in detail. Now, this is a 30-minute chart. Now, we're on the micro contract. In the last 13 minutes, okay, we've got 13 minutes in the life of this candle, and we've traded 4,952 micro contracts. So there's plenty of liquidity. Okay, so don't worry about the liquidity. Okay, so we'll go back to the regular Dow. Okay, now if we jump back to the ES for a minute, okay, on the large contract in the last almost 14 minutes now, we've traded, you see this green number here, we've traded 72,000 of the full-sized E-mini. Now if I go M, Y, M, so snap a mental snapshot of what this chart looks like. 75,000 contracts on the full-size E-mini. Now we're going to go to the micro. And the data is not populating. I've not had that happen before. Oh, wait a minute. We're supposed to be doing the MES. My mistake. Stick around me long enough, you'll know I make a lot of them. Okay. All right. So on the micro ES contract, it looks identical. How many micro contracts have been traded in the last 15 minutes? 56,000. So it is very, very liquid. Okay. Plenty of liquidity, not a problem. Okay. In fact, it's become a great tool for folks to bridge the gap between trading in sim and going live. Get you accustomed to being in the market with live money. Again, you're not going to make a lot of money because, you know, the commissions and whatnot, but it is a great step, and it's something that we've recommended to our members for a while. So thank you for the question, and I hope the answer helped you. And again, if you want further clarification, if anyone wants further clarification, you can reach our broker Bert at Daniels Trading by calling 866-928-3310. He'll actually answer the phone, and you can say, hey, I heard about you on CFRN, and Bert's been our guy, our go-to guy since 2008. Now, our company and Daniels Trading, two completely different companies. Okay, Bert doesn't work for us. He's simply the broker that we have chosen for our company and for our personal accounts because he's a stand-up guy. when the stuff hits the fan, he's the guy you want in the foxhole with you. He's not just a broker. He's also a trader. He puts on and takes off trades himself all day long. Most brokerage firms, if you call and ask to speak to the broker, they're going to go, well, what do you want? Well, why do you need to talk to him? Well, I can probably answer your question. And then after you ask the question, you hear him flipping through some kind of manual, right, to look up the answer. When you call and talk to Bert, you're not only talking to a broker, you're talking to a trader. He uses our methodology, he uses our strategy, he uses our indicators. In fact, he used to do a Thursday afternoon class for a very long time, which was a slow walk through everything that Michael does in the morning. And we have a bunch of those videos archived. So if you contact Valerie at 949-42 Emini or email support@cfrn.net, Valerie can point you towards some of those videos with Bert. He used to do like an hour every Thursday afternoon, but it's just the same thing over and over and over, so eventually it didn't make sense for him to just keep doing, because you could just go watch the ones he did, because our methodology and our strategy never changes. We haven't changed a rule or a line of code since 2008. Okay? If it's not broke, don't fix it. One more time, you can reach Bert at 866-928-3310. Now, I'm not sending you to him because we make a commission off of it, because we don't. That would muddy the water, okay? We recommend Bert because we trust Bert, because Bert cares about his clients. In an industry where 90% of traders fail, very few brokers put much time or effort into a new client, because statistically, that client's not going to be around 6 months from now. Bert takes a very unique and different approach. He takes a very personal interest in you and in helping you learn how to trade. And the beautiful thing is if you need to call him and you're talking about the BBC or red and falling or the weekly trading, he speaks the language, okay? So there's no obligation to call him. He's not going to try to hard sell. He won't even try to soft sell you into opening an account. But again, you can reach him at 866-928-3310. And I'd like to take this opportunity to just say, Bert, for all the things you've done over all the years, that bell's for you. Okay, I'm going to shift back from the micro to the regular ES. Identical chart, because it's the same market. It's just sliced and diced a little differently, so that instead of, paying $50 a point, it pays $5 a point. Okay, so we've now triggered the short CTA as I was talking at 46.57. These numbers went out last night, 6:20 p.m. Eastern, and so far we've dropped to 46.50 and a half, so we'll call it 51. So far we've dropped 6 points at $50 a point. That's $300 per contract traded. What is price trying to do right now? It's trying to get to this weekly trading zone. Price is always trying to get to a weekly zone. Does it always make it? Not always. But when price is below the BBC, it's trying to get to the zone below, like it did. Okay? Now, price got above the BBC, but if you look left at that resistance, it got stopped in its tracks, got sent south, and now, man, I know so many of you are in this thing. That bill's for all of you, okay? If we hit the zone, which is 46.47, That'll be a 10-point drop at $50 a point. That's $500 per contract traded. If you've earned the right to trade just 2 contracts, it's $1,000. But don't start trading live right away. Be patient. Learn the methodology, learn the strategy, come to class every day, ask lots of questions, put your 10 consecutive days together in sim, and then when you go live, as we were discussing, you can go live with the micro and then ease your way into the full-size ES. Okay? All right. What a beautiful thing. Now, on our daily, remember, we said we're right at the top of that window, but we said we wanted to get below this weekly trading zone. Okay, 46.47. The next zone below that for this week is at 46. I'm sorry, 45.95. Come on. 45.95/96. And by the way, that is the lowest weekly trading zone for this week. Okay. All right. So as price drops to the zone, we expect it to be support until proven otherwise. So price comes down to the zone, finds support. It may consolidate. It may bounce. What we want to see for that big picture trade I showed you, we want to see price drop below this zone, perhaps pull back up a little bit, find resistance. It should look a little something like. Now, it could consolidate for a while first, but what we'd like to see is a move down, a retracement. In other words, after the zone acts as support and we trade through it, we'd like to see price come back up and test it and show us that it's going to be now resistance. And where we take action, not here, not here, but here. Okay? And this little area right here, between the swing high and the swing low, there's your goal for the day right there. Okay. All right. Now, everything Michael teaches you and Val in the live training room each morning, the underlying principles are exactly the same behind the logic alerts and the concierge trade alerts, except they're based off of a 30-minute chart instead of a 4-tick range chart. In the live training room, Michael and Val risk 8 ticks on every trade, on every market. Okay. On the logic alerts and the concierge trade alerts, because we're dealing with a larger time frame with potentially larger targets, more risk is required. But we don't use a fixed number. The maximum we want to risk is $300 per contract per trade, but less when possible using market structure and that simple 3-step process that we teach all of our members. So on an S&P alert, the max you would risk would be 6 points, as long as there's 6 points of profit potential in the trade. So from 57 to 47, that's 10 points. So this trade has 10 points of potential, but still the most you would want to risk is 6 points. And we, in that 3-step process, teach you how to use different time frames to determine your entry and to determine where your stop loss needs to be. Okay, and so the low of this move so far, again, is 46.50. So we've had a 7-point drop so far, $50 a point, $350 per contract traded. Now, Important prices, important areas are almost always tested. So now that this has triggered, there's an extremely high probability that price will get back above the trigger and trigger again. Some days we see alerts triggered 2 times, 3 times, 4 times, 5 times, 7 times. Depends on the day. If you're new to the world of CFRN, we have archived every afternoon recap broadcast on our YouTube channel. There's currently over 1,800 individual daily live broadcasts archived there. I suggest to anyone new that you go back a week, go back a month, better yet, go back 6 months, better yet, go back a year, go back 2 years, okay? You don't have to watch the whole show. Just fast forward to the part where Michael is doing his recap, and you'll hear him saying the same things and using the same tools. It's not broke, leave it alone. And then you can fast forward a little bit till you see me doing the recap of the logic and the CTAs. Nothing's changed. Pick any day at random and you'll hear us. There's so many other rooms out there. Oh, it's this kind of a day, so we're going to use this strategy, or we're going to use these indicators. Okay? That gets confusing, right? What kind of day is today? And so, what kind of indicator should I use today? It doesn't care what kind of day it is. Up day, down day, slow day, fast day. Everything we do is grounded. Okay? It doesn't change. Price always reverts to the mean. When price drops to a weekly zone, we expect support. When price rallies to a zone, we expect resistance until proven otherwise. Okay? Alright, so we've covered the S&P. We've covered the Dow. Okay? See how the Dow spiked and just barely tapped the top of that window. Okay? It may be pulling up to actually trigger again. The Russell has gone from zone to zone. We did not trigger the CTA on the long side. We did trigger on the short side. The actual number is 2417. Now, on the first trigger, we dropped to, the first trigger we dropped to 2414 and a half, so 2.5 points. Okay. And then price got back above the trigger. It attempted to trigger here. It managed to drop almost 2 points. And then this trigger here continued down as a red candle. And so from 2417 we dropped to 2412.20. So we'll call it 2413. So that's 4 points, $50 a point, $200 per contract traded. Buyers came in, drove it up, and turned it into this big green candle. But you see, this wick was a red candle before it became a green candle. And this trigger continued here. And where did the market find support? It's no mystery. Right there. Boom. Right there. Boom. This time we triggered and we went from the published entry to the published target. Every alert has a final trade to target, whether it's a logic or concierge. If it's a long alert, the final trade to target is the zone above. If it's a short alert, the final trade to target is the zone below. Okay? And so from the published entry to the published target, that's a 12-point drop, $50 a point. That's $600 per contract traded. If you've earned the right to trade 2 contracts, $1,200. So what's price doing now? It spiked the zone, so it's going to consolidate here a little bit. One of two things will happen. Buyers will push us up to the step line, initial resistance, red and falling, next potential resistance, BBC, next potential resistance. Or after consolidating, price will drop, take out this low, and then we've got lots of room down to the next weekly trading zone at 2376/77. Now you see, our traders had these numbers, these weekly zone numbers. Hopefully you can see the importance of having this framework before Wall Street even wakes up on Monday morning. Okay? Think of the weekly zones as fixed support and resistance. Once they're published, they don't change. They're carved in stone. And as you go back on YouTube, a month, 6 months, a year, 2 years, you're going to see price behaving at the weekly zones exactly the same way you see it behaving today. Because it's based upon an underlying principle of how markets work. It will be the same tomorrow as it is today, just like gravity. Okay? All right. So congrats to all the traders who took that Russell short down to the target. That bell's for you. NQ. No trigger on the long side, but we triggered on the short side. Okay. Now the NQ pays $20 a point. So the first trigger took us down to 16,133. So 55 minus 33. I'm lazy, I guess. 22 points at $20 a point. $440 per contract traded. Right there. Okay, then price did all the stuff it does. Okay, I'm not going to break down every move of the market, so I'll lose your attention. We trigger again. This time we put in a swing low. At 16,133. Basically the same thing again. Another $440 per contract trade. Then the price got back above the trigger. See it right here? And this time we dropped come on. Hey, we got above the trigger. We triggered. Okay. Now this candle and this candle, those red candles became part of this. This was a red candle. It's a wick now because buyers came in at this point and drove it up. But this is where the candle opened, and so it was red all the way down to a low of 16,041. So that's 110 points. It's over $2,000 per contract traded. Okay. This move, over $2,000 per contract traded. Now, not all triggers are created equal. You notice on these triggers we had red and falling. That's important for a short trade. Over here, price was below the BBC, which means we can short it, but we had blue and climbing right here, and we have to anticipate that as potential support. So on this move, your entry might have potentially been on the break of the low of this candle here, maybe 16.091, down to this previous swing low. Okay, we trade every market exactly the same. Yes, I know they have different personalities. We're not looking for a relationship. We're just looking for a high probability, low risk trade opportunity. And if you have it in your head that you need to get 5 or 10 or 20 points a day out of the market, I suggest you rethink that. It's a lot simpler to get 2 points than it is to get 20 points. And 2 points out of the S&P, which is the same as 20 points out of the Dow or 2 points out of the Russell, can earn you as much money as you want to earn based on the number of contracts that you trade. Okay? So you can trade one contract and swing for the fences and try to catch those 10, 20 point moves. Or you can become a specialist at taking a couple points a day out of the market. If you can consistently take 2 points a day out of the ES, or 2 points a day out of the Russell, or 20 points a day out of the Dow, consistently, and then using the profits you earn trading one contract to fund the second contract, and the money you earn trading 2 contracts funds the third contract, that's one way to build a business. Okay, that's how our 24/20 blueprint teaches you how to build your trading business. But it's your trading business, and if you want to come in and swing for the fences every day, that's certainly your right. And if that's the route you choose, we'll still help you accomplish your goal to the best of our ability. As a passport holder, you have unlimited access to one-on-one mentoring. Not only do you have 2 hours of live instruction every morning, and this 2-hour broadcast in the afternoon, and the members only workshop on Thursday night. If you're still struggling with something, you can book a one-on-one session with myself or Michael or Valerie or Bert anytime. As a member, you have unlimited access to one-on-one mentoring. You won't find that anywhere else. Now, I know some of the websites say that they do one-on-one mentoring. Okay. Guys, I've heard so many horror stories. We actually do it. We actually show up. We actually do try to help you. Okay, so looking for a window of opportunity? Or a woo, as they started calling it in the room? We need to see price break below this previous support. Call it 160.18 down to 16,000. That's 18 points at $20 a point. It's $360 per contract traded from the top of the window down to the zone. Okay. Could you trade a break of the low of the current candle down to this potential support? You could do that too. That would be 38 down to 28. That's 10 points, $200 per contract traded. But you have to expect that this is going to be support until proven otherwise. Okay? All right. Okay, we've covered the S&P, the Dow, the Russell, the NQ. Crude oil. No trigger on the long side, trigger on the short side. And on the only trigger, which is unusual, to only get one trigger, as you've just seen, went straight to the target. The trigger, the published entry was 83.10. The published target is the zone below, which is 82.45/85.50. That's a $600 per contract move. If you've earned the right to trade 2 contracts, that's a $1,200 move. You've earned the right to trade 10 contracts. That's $6,000 right there. Do not trade live. Do not trade real money until you first put together 10 consecutive days in a row in the simulator where you reach your goal using our methodology, our strategy, our tools. Okay? Only then do you get the green light from the blueprint to actually start trading real money. Okay? I'm sure you've had enough experience blowing up accounts. Our goal here is that you never blow up another account. Now, price pulled up to the step line and red and falling where it found resistance. No surprise. 81.75 down to 81.55. That would be a $200 per contract trade. Or you could wait for price to take out this low, and then there's this big window down here. Roughly 81.25 down to 80.65. Okay. But this one here, what did I call it? 75? Did I call it 75? It's an area. You're going to be looking at your smaller time frame to execute your trade. But 75, I think I said 75 to 55. If you want to be more conservative, go 65 to 55. That's still 10 points or 10 ticks. At $10 a tick, it's $100 per contract traded. Okay? All right. Moving on to gold. Giddy up. Gold. Gold actually gave us some two-sided action. All right. The short side, the trigger was 18.27. And the first drop took us down to 18.26. That's $100 per contract traded. Then we got back above the trigger and it gave you another $100 per contract traded. Then it got back above the trigger, and this time it dropped to, we'll call it 20, it's 24.6, we'll call it 25 to be conservative. That's $200 per contract traded. Then it got back above the trigger and handed out another $200 per contract traded. This trigger you would not have taken because you've got blue and climbing in the picture. The long trigger was 18.36. From 18.36 to 18.40, that's $600 per contract traded. Yes, we've gone substantially higher. We almost made it to the next weekly trading zone. But price always reverts to the mean. So price has now pulled back to the BBC. So what do we expect? Nice rally. Okay. From the published entry to the published target, and the target was published Monday morning at 6:15 a.m. Eastern. 36 to 40. It's $400 per contract traded, but it just kept going. Now, when price slices through a weekly zone, remember only three things happen to a weekly zone. Most likely is this, consolidation. Second most likely is rejection, which is that. Third and least likely is the slice. That only happens 5 to 10% of the time, but when a slice runs out of energy, it will most often retrace back to the zone it sliced through and then continue in the direction of the slice. The only thing that might prevent this slice from doing what a slice normally does is the fact that it may find good support at the BBC. We have to anticipate and expect that. That's a higher probability than it coming all the way back to the zone. But if it does come back to the zone, that would be a picture-perfect example of the slice, and then we would look for another leg to the long side. Okay, so this requires some patience right here. This candle still has 13 minutes left in it. We want to see how that next candle opens. Okay, does it open green? Does it start climbing? Or over the next 13 minutes, perhaps we see price close below the BBC. That's a heads up that price is probably going to the zone that it sliced through, where we expect it to find good support and then a leg to the upside. Okay. All right. Last on the list, silver. Okay, so silver, a $1 move pays $5 grand. When price goes from $24 to $25, if you're trading futures, it's $1 grand. And see how silver's just like gold's pulling back to the BBC. It's sliced. Oh, this is beautiful. Look, we sliced through the zone, ran out of steam, retraced right back to the BBC and the zone we sliced through. Now what do we expect? Another leg to the upside. Now, a $1 move in the price of silver, if you're trading futures, it's worth $5 grand. Okay? Over here, price basically got rejected. The number was 24.31. It dropped to 24.29. That's 2 pennies. It's $100. Up here, the number was 24.40, and it touched 24.42 and a half. So 2.5 pennies. Okay. And then price just kind of jockeyed back and forth, and then it got serious, and it made a very nice move to the downside. Now, the entire move went to the target. Remember, on a short, the final trade to target is always the weekly trading zone below. This number was given to this zone was given to our members Monday morning, 6:15 a.m. Eastern, 2405/06. So from 31 to 06, it's 25 pennies. 100 pennies is $5 grand. You can do the math. Okay. Then, this is when the news came out about the highest CPI numbers, consumer price index, inflation, biggest increase since 1990. Thanks, Joe. He'll never be Shoeless Joe, but you and I may be in the not so distant future. But anyway, 24.40 to the target, 6 pennies. But it continued on to the next zone, sliced through, and is now pulled back. Anticipate possibly some consolidation along this area. There's 9 minutes left in the life of this 30-minute candle. We want to see the market prove itself. Okay? Just because this is what happens and how it unfolds 80% of the time, as I showed you when I showed you the Logic 247 recap, over 171, 72 weeks, over 8,700 individual alerts, we know that 20% of the time the market does not do the next high probability thing. We don't know what's going to happen next. Nobody does. A lot of people lie and tell you they do, but that's not how God created the universe. God never gave Adam the ability to change the past or to know the future. And those two things are inextricably linked for eternity. So we're honest with you. We admit we don't know what's going to happen next, but using our methodology, our strategy, and our indicators, we do know with certainty what the next high probability move is. And 20% of the time, over all those weeks and all those trades, the market actually did something other than what the alert said. It's going to happen. If you're looking for the Holy Grail, please let me save you years and a lot of money. Okay? I've taken on students who had spent $300,000 and more trying to learn how to trade and became a passport holder almost as a joke because they felt like they had nothing else to lose. And today they're profitable because we're magic men, because we know the secret of Wall Street. No. Everything we do, everything we teach, it's based on logic. Pure and simple. That's why the alert service is called Logic 247. We apply logic to the markets around the clock, 24/7. Okay? All right, that brings us. Now remember, we want to get below this zone, okay? We don't want to just spike it. We want to have some confirmation. In other words, I'll draw it again. We want to see price come down. And then we want to see that support turn into resistance. And then we're ready to get busy. Okay? All right. Mike G, quick observation. E in the chat box. ES got back above the CTA again and went down to the weekly trading zone this time. Oh, well, thanks for pointing that out. I was here on the chart and I didn't even notice it. Thank you very much, Mike G, for pointing that out. What Mike G was saying is we had measured this and then price got back above the zone and now it's dropped all the way to the target. From 57 to 47, the zone is 46/47. It's 10 points, $50 a point, $500 per contract traded. Okay, with that, I'll remind you that everything we do, everything we've ever done, and everything we're going to do in the future can all be yours for one payment. Go to eminifuturestrading.com. No recurring weekly fees, no monthly fees, no fees of any kind. Once you become a lifetime member via the passport, then you are part of the family. And family is for life. No surprises, no gotchas. It's just how we've decided to do it. So go there, eminifuturestrading.com, get your passport, call Valerie, she'll get you all set up with your charts and indicators, all of the links you need to connect to the different Telegram channels. The Telegram discussion groups are very important. A lot of great information, and there's years of posts in there. You can scroll back through the Telegram channel and read questions that were asked a year and a half ago, 2 years ago, and the answer and a chart that explains it. I mean, that alone, just having access to that alert trial discussion channel or the members only discussion channel, that access alone would be worth the cost of the passport. So, it's your decision. Pay me now or pay me later, a guy once said. But that would be put offish to say something like that. So I won't say that. I'll just say, I don't want you to become one of the 9 out of 10. I want you to at least have a shot at being the 1 out of 10. 9 out of 10 people fail simply because they don't have a teacher. Imagine trying to become an electrician, a plumber, a mortician, an accountant, a brain surgeon, a rocket scientist, an astronaut, without someone first showing you how to do it. If you've been stumbling and failing and blowing up accounts, let me ask you, have you had someone teach you how to trade? Well, I must have 20 books on my shelf. Okay, books are good. In fact, when you become a passport holder, you'll get a legal free copy of Trading in the Zone by my dearly departed friend Mark Douglas. Videos are great. We have thousands of them. But watching a video will not teach you how to trade. Now, you can watch videos of swimming, people swimming. You can even watch a video of a swimming lesson. But that's not going to teach you how to swim. Number one, you're going to have to get in the water first. But wouldn't you want a living, breathing instructor standing there, holding you, helping you? That's what we do. Every trading day, from 9:30 a.m. to 11:30 a.m. Eastern, Michael and Valerie are in the live training room, putting on, taking off trades, explaining every trade, answering all of your questions, while you trade along in Sim and learn the methodology and strategy, because we want you to be able to do this without us. Now, a passport means you're a family member for life, so we don't want you to run off. Trading's a lonely business. We've built a great community filled with great people. We want you to remain a member of this vibrant community, okay? But we also don't want you to be dependent on us to tell you when to get in and when to get out. When an alert comes out, it doesn't mean you run to your computer and put on a trade. No, it means you run to your computer, you look at the alert, you look at the chart, you understand the window of opportunity, and then you trade it based on everything you've learned, either in Sim or live, depends upon where you're at in the process. And there is a process. Welcome to the process. Okay, enough of that. 949-42 Emini with any questions or support at cfrn.net. We turn our attention now to our good word for the day. Yesterday, we talked about spiritual growth being a group project. Today, we're going to talk about self-control. Romans 6:12. Do not let sin control the way you live. Do not give in to sinful desires. Paul writes this in Romans 6:11 through 13. Consider yourselves to be dead to the power of sin and alive to God through Christ. Do not let sin control the way you live. Do not give in to sinful desires, or let any part of your body become an instrument of evil to serve sin. Instead, give yourselves completely to God. If you let it in, your body will lead you astray. It's not that it's evil, but it has certain appetites which are always ready to respond to surrounding stimuli, all of which are terribly appealing and temporarily satisfying. Chuck Swindoll wrote this: "Life on earth is really nothing more than a string of moments. And I don't want my testimony for Jesus Christ to be shattered by a single moment of indulging my flesh. I don't want one moment of rage or pride or lust to cast a shadow over a lifetime of walking with God. Frankly, I fear that possibility." This is Chuck Swindoll writing. Frankly, he says, "I fear that possibility. And do you know what? I want to fear that possibility. Because when I stop fearing it, I know I'm in grave danger." So, audience, family, friends and neighbors, how do you deal with your carnal appetites? The only way is to make God's Word your code of conduct and refuse to compromise. And if you need a role model, you won't find a better one than Jesus. In Matthew 16:24, Jesus said, "Whoever wants to be my disciple must deny themselves." Now, don't get me wrong, obedience is greater than sacrifice. But every day, look for an opportunity to deny yourself in some small area. You'll be surprised how hard it is. But the payoff comes later when you need to deny yourself in a big area of life that has much more riding on it. So get some practice with the little things. Despise not small beginnings. That's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.